Welcome everyone, Simon here from the Whales of Wall Street. We have a fascinating interview video for you guys today introducing Matt from AllianceBlock and Mads from ArkeFi. We'll be going into a bit more detail about how those guys integrated project-wise. And of course as well, we'll be looking at some really interesting topics, particularly around real-world assets, the utilization of them, the incorporation of them, and how the definition of a blockchain and the abilities of these two projects give a solution and a platform for anyone around the world to be getting involved in things that they may have not done so before, whether that be from accessibility perspectives or simply just didn't know how. So there's a big educational piece here for sure, and certainly something of great interest as we develop the Web3 orientation with blockchain in the years to come. So let's go straight into this one. It's a fascinating conversation. Hope you enjoy it, and I'll see you on the other side. Okay, guys, so absolutely privileged to have Mads and Matt here. So we've got Matt from AllianceBlock and we've got Mads from ArkeFi. So we'll go into a bit of an intro on those in a second. But for sure, I think it's going to be really interesting for the audience to get a bit of more detail about each of the projects, how they work together, and of course, some other topics as well. So guys, if you wouldn't mind, maybe Matt, we'll start with you. If you could kindly introduce yourself and a bit about AllianceBlocks. And then, of course, you can start on Mads as well with the ArkeFi side of things too.
Perfect. Thanks for having me. First of all, really happy to be here and looking forward to this recording. For AllianceBlock, we've been established since 2018, and we've always been on the forefront of DeFi and creating basically the infrastructure for the decentralized tokenized markets. And we do this by creating a foundational protocol with many components that are modular and composable and extensible that can be used in many different use cases. And what we aim to do is work together with established companies that are expert in their domains and help them to take a Web2 use case and provide the Web3 technology. And that's why today I brought Matthijs with me from ArkeFi, because together we've been working on something really cool that we will talk a little bit about today. So Matthijs, floor is yours.
Thank you very much, Matthijs, and thank you very much, Simon, for having me here today.
Pleasure.
So basically, I'm the CEO and co-founder of ArkeFi, and ArkeFi is basically coming out of the main company, which is Artbanks. And so what we have done for the past 3 years is that we have created an art ecosystem, where basically it's a collection management system where we support collectors with uploading their collection. We support them with shipment, with consignment, selling, and financing. The funny thing was we had more than 500 million of requests last year for financing. So we realized we needed to build a new constellation for the industry so we could support all those elements. And that's just basically how ArkeFi then was born. So for us, ArkeFi is a platform where we will democratize art-backed financing. We would like to enter also cars and collectibles, but we have to start in really our sweet spot, which is art. So we created a new model together with AllianceBlock, where basically we have embedded options directly into an acquisition contract. We'll go a little bit deeper into that at a later stage, but this is just the overall aspect of what we're doing.
That's awesome. Really appreciate the intro, guys. And I'm sure, looking forward to seeing how you guys operate together, and all the other bits of information that will be coming out in this video. Really looking forward to it. So, Matt, I guess what would be really cool, and certainly from the aspect of the audience that perhaps don't know AllianceBlock too well, I know we've got a big following of yours in the channel audience anyway. But in relation to the introduction you've already given, it'd be really nice to know kind of like, what AllianceBlock kind of set out to do when it first began. And are you still on that path? How do you see that path like progressing over time? Because I know there's a lot of things going on and we'll probably touch on some of those later on in this interview, but it'd be really interesting to see or hear about some of the aspects of interest within AllianceBlocks right now.
Yeah, actually, it's a really funny question because I think some would say that in the past 3 years, we kind of deviated a little bit from our initial path. But in the last year, we went completely straight back to that initial path. And so to answer your question, yes, we are absolutely still on that path. If you look back into our white paper, we were speaking about the Prometheus protocol. This is the protocol that allows tokenization of real-world assets, a role-based access control for on-chain data, all kind of stuff like that. We speak about extensively in our white paper. After the release of the white paper, we started building on several components like the data tunnel, the decentralized exchange, the DeFi terminal, and of course our bridge. And one might say like, well, hey, Matthijs, why did you build all this? It doesn't make sense. It's not the Prometheus protocol. These are all different standalone products. And I could see why I would think that, because some of these products are used as a whole company in itself, and we built all of those next to each other. And but the end goal is that these are all necessary components in order to achieve this high over vision that we set out to achieve. Like the bridge is for interoperability, so that we can transfer data from one network to another instantly. And we needed to have this done in a better way, because we've used bridges for our own token initially, third-party bridges, and we were just not very happy about it, about speed, cost, reliability. We had a lot of bridges that got hacked, so we needed to find a better way. So that's why we came up with the bridge. Not just because we wanted to have a product out there that we could sell, but because it makes sense in the big scheme of things that we're doing. And the fun thing is that the Prometheus protocol is now what we call the Nexera protocol. And Nexera is a thing that comes back a lot. It's also in the name of our token. And Nexera, it stands for the next era of what we're doing with regards to Web3. So absolutely, I would say that we are now on the path that we initially set out to more than ever, because things are starting to be more clear how they interlink together.
Mm-hmm. Yeah, that makes sense. I suppose one of the big aspects of AllianceBlocks and in general, the way that not just the crypto space, but blockchain in general and the tokenization of everything is going, is this kind of like, real world asset application that's going on. And I think this is where we can probably pull in Mads from the ArkeFi side of things as well. So you guys are obviously doing a joint collaboration right now. Mads, this might be a good opportunity for you to perhaps explain that bit slightly more. But also, I'm really intrigued because we talk about on the channel a lot about tokenization, digitalization of assets, and I know art is of course a massive part of that. We've talked about things like cars, diamonds, which is one of those crazy things. And what I find quite interesting, which we'll probably go into in a bit more detail shortly, is the access side of things, and how easy accessible it is to more and more people than ever before with the utilization of exchanges and things like that. But before we go into that, Mads, if you could kindly explain a bit more detail of how the ArkeFi and certainly the Art Bank side of things works with AllianceBlocks and how that helps the end user.
Yeah, definitely. So basically, we come initially from Web2 because we have collection management system. We are dealing with high and ultra high net worth individual on a daily basis, and we're supporting them. But we quickly realized the technology there is in Web2 doesn't really solve any of the issues that those collectors actually are having. And the issue was really to subtract liquidity out of the collection, because you have to imagine if you have art, cars, or collectible, it doesn't really matter. It's not a bankable asset class yet. And that means the owners, they cannot just go to the bank and say, hey, I would like to have X amount of money out of my Picasso. It's hanging here on my wall or down at the Freeport. So it's essentially illiquid assets, which is just very, very difficult to handle in case you need to reinvest into something new, could be whatever, really. So we realized that there was a big need to subtract that liquidity. So we identified AllianceBlock as being one of the leading providers in the area of Web3 technologies. And also when it came to the compliance side of things, because art is also known to be highly involved with fraudulent activities, money laundering, and all these different components. So for us, it was very important that we could embed an entire flow from onboarding of a collector, but also with the KYC component, AML screening as well, because essentially we want to create a compliant infrastructure. But what really ArkeFi really differentiates from anything else around the market is, if you look at a typical fractionalization platform, people are normally just saying you can buy a fraction of a Picasso, just as an example. Now, you are always speculating in that value to increase tremendously over time. Reality is, however, it takes a lot of time before some of those pieces really come up and gain momentum. So what we are doing on the financing side is essentially we have created in the smart contract an option. And that means that investors has the opportunity to go in and buy a Pablo Picasso for 50% of the market value. And that means there is two scenarios that can occur. Either the seller, he reacquires the art piece after this option period, and the investors get a fixed amount return. In case you do not acquire the object after the option period, the ownership is transferred over to the investor. And now imagine that they just only paid 50% of the market value for that asset. It becomes very, very attractive for investors. Also, when you look at a risk perspective, because art and collectibles is known to really to maintain and gain in value over time. So it becomes a more safe environment to invest in as well, because it's backed by real world asset.
I really appreciate that, because obviously that kind of defines really the general need and the demand of, you know, why a real yield in DeFi is so appropriate, and why people are looking for that now as a solution, and particularly the access to that. I know I mentioned just a minute ago about the different variations of tokenization and certainly the physical assets. I know this terminology of NFTs came about over the last couple of years, and it was very heavily orientated around art, of course, but we know now there's so much more application, as we mentioned a few earlier, but houses, watches, you name it. And PNFT became a terminology, physical NFTs. I'm quite interested to know, and this is kind of open to both of you, because I'm sure you have both your areas of expertise in this kind of part of the question. The limitations and the opportunities when it comes to compliance and trading of fractionalized real world assets. How do you see that kind of evolving right now? Because we've got loads of things going on here in the UK with the laws that have just passed through Royal Assent in regards to the utilization of cryptocurrencies, digital assets, and things like that. Whether it be within your own regions, etc., or what you're seeing from your company level, where do you see we are with that compliance and sort of legislation aspect of the utilization of assets in this way?
So I can start from how we've seen and experienced this technically, and how we prepared for that already a couple of years back, and how we also spoke about this in our white paper. What we see and what we also believe is that, especially after the FTX collapse and Terra Luna and all these kind of black swan events, we know that no matter what, stricter regulations are coming one way or another, and we see it within the EU. It's the most comprehensive set of rules for digital assets, MiCA, right? And it's coming next year, and a MiCA 2 follow-up version will follow after that, but it will even more stricter with regards to trading as well on decentralized exchanges, etc. So instead of being reactive and take the position of okay, let's wait and see what happened, we went proactive, and we started to create a compliance rule engine at the core of our protocol, the Nexera protocol. And what it means is that we're looking for ways that we can provide compliant workflows, while without compromising the privacy of users. So as an example, what we could do is take a KYC verification of a user. The KYC verification could take place directly between the user and the KYC provider. the user receives back their KYC verification information signed by the KYC provider back locally. They can store this, encrypt it, and then once they interact with the protocol on-chain that requires to know that they're above 18, that they're in a whitelisted jurisdiction or the EU or EEA or something like that, they're required to provide this information, but it could be as zero-knowledge proofs. So you can deploy a verifiable credential on-chain that shows that someone is KYC verified, they're above 18, they're not on a PEP sanction list, but without revealing the data behind it. So you know they're above 18, but you don't know how old they are. They know they're in the EU, but you don't know which country, stuff like that. And because we allow programmable workflows, you can take these properties and use them in any way that are applicable to business rules, but also to legal frameworks that are still being worked on. And who knows what the SEC is going to come up with if there will be a replacement of Gary Gensler that will say, we do need some crypto-specific rules, right? So we don't know what's coming, but we know that more is coming. So in order to be ready for that, the only way that you can be ready for that is to allow a protocol to grow with it and to be able to set these rules in the future. So we are able to follow the rules that we know now, but we don't have to start over or scratch our heads when new rules will come.
Yeah, I suppose it's definitely an evolution. I don't know, Mads, if you got anything you wanted to add to that, because it's a really
no. I think
topic.
Actually this was very much spot on, exactly the same way, and I see it because at some point right now we are all operating in a little bit of a gray area in terms of we don't know what comes next, and as Matthijs said, you have to prepare actually for the worst to come. So better embed all those things from the beginning to make sure you're on the compliance side for whatever tougher jurisdictions that will be enforced later on.
Yeah, it's really interesting. I think I'm actually in the middle of a big video right now in terms of the even things like the EU Data Act that's going through Parliament aspects of Europe right now, from the privacy, the IoT aspects, and well, you've just nailed on the head there, Matt, as well, in terms of identity, KYC. There's so many more questions than there are answers, and I think it's great that there's people like you guys in the industry that can really help define that. And there's more kind of advisory aspects, coming more than ever before for projects, technology partners to, start not necessarily hitting back, but being a part of that. And I think it's massively important because it will affect everyone and anyone over these years to come for sure. So it's going to be a really interesting development. I think it's just an evolution. Everything's still in development stage, still, maturity to come from the whole entire space, to be honest. So yeah, it'd be really cool to see those developments as we go along, and how you guys take on that over the years to come too. One of the other defining points, and this is probably open to you, Mads, in particular as well, when we talk about like the accessibility of real world assets. So I've mentioned before about some of the different areas of tokenization, the opportunity of things like NFTs. One prime example more recently was diamonds. I couldn't believe the investment opportunity that was there, but actually 90% of the world's population, didn't have a clue how to get involved with it or where to go to buy a diamond. And of course, usually they're quite expensive in terms of, relations to gold and things. But now fractionalization and tokenization allows people to buy parts of a diamond, or at least have that digital footprint that I own this, and it actually represents something in the real world as well. How do you guys kind of like feel, how the institutional interest and the general interest or inclusivity of retail users and investors has evolved over time, and where you see it now, where do you see it going in the near future in terms of that accessibility and that interest as well, because it's becoming more mass aware, awareness is becoming more mass orientated?
It's a very good question, and I think it's it's a little bit difficult to say, because now you mentioned, let's say, diamonds. I've once been involved with selling some very expensive diamonds, and in the beginning we had no clue. What are you looking at here? We know everything about art, right? But
Yeah,
all
exactly.
of a sudden you see a huge diamond, and what is the cut? What is the carat? All these things, the clarity. We have no clue, right? So we had to bring in experts to identify what is the actual value and how do you assess that in a proper way. And it worked out quite well at the very end, but it's a process, and I think it's all about education. And this is exactly the same to when you're talking about real world asset. I think there's two very important components, and that is to differentiate, first of all, real world assets and, let's say, non-bankable assets, because a diamond will fall into this non-bankable asset, meaning that the banks today do not really understand, if you come in with a diamond, what is this all about. And I think it's about education at the end of the day, because you need to be able to educate these type of institutionalized investors, but also retail investors, because you need to provide some kind of clarity when it comes, for example, to art. Okay, how do you assess the value? What is the parameters that is being used to assess the values, and what are the probabilities of these, let's say, asset classes to increase in value, so you feel more confident to investing into them? And I believe that once, let's say, the average individual and the retail investors basically embed this more through fractionalization, you will see all of a sudden the institutions also to tap into this industry, because now it becomes like a mass product all of a sudden. But really, it requires tremendous amount of education. And I think my realization of that was back then with the diamonds, because I know more or less everything about art. And for me, it's like, oh, of course, you know what the value here is, and you have to look at those different parameters for this specific artist. And then all of a sudden you're on a very steep ground when you look at a diamond. So it's difficult to say how it will formulate in the future, but I believe companies like ours with ArkeFi and other fractionalization companies will essentially empower the growth of this entire industry across different type of asset classes.
Yeah, it's really interesting. Before I go on to Matt on that topic, I just wanted to quickly throw in there about the art side of it. How do you see the similarities there? And I know that some fractionalization companies are involving artificial intelligence to a level as well, which is really interesting, defining whether something is actually real or not. What are you actually buying here? What defines it as real? And with your expertise in the art side of things, do you see that as a very similar comparison into things like other physical tokenized assets or real world assets?
Yeah, definitely. I mean, it's the same technology that potentially can be used for diamonds. The only difficulties is if you come to a car, right? You have a chassis number that you need to identify, so you cannot really scan anything because it's underneath the hood, so to say. So this is going to be more difficult, but I think for art, it's still early days. Also, I know about the companies that are utilizing AI to identify whether they're genuine or not, but it also have certain limitation because you're operating in, let's say, lost history. And that means, for an example, if you have an old master and you were to use this type of AI, you cannot identify exactly in which point in time and where these pieces were restored. And that basically causes pollution to an AI, because if you take a newly produced art piece, it's easier to train the AI. But if you take, let's say, an old master, it becomes very difficult, because how much is from the master himself and how much is from a restorer, and this is really where things get a bit blurred. And that's also what you saw on the market. There was a lot of scandals around old masters, and prices, they dropped tremendously because there was all of a sudden a new risk, because AI helped with identifying, let's say, non-genuine pieces, but it's not 100% accurate when it comes to old masters yet. But it, of course, made the market a bit more cautious to investing into this type of objects.
That's really interesting. Apologies, Matt. I think you had something to say on this as well.
I wanted to add something. If we start to look from a community perspective, why would there be an interest in owning a piece of top tier art, or a diamond for that matter, right? And I wanted to add, like, there is the history from the last 1.5 years, more or less, where we've seen different things. High yields in DeFi are unsustainable, and it's hard to pinpoint the actual value in some NFT projects. what is the actual value of holding something that you own? It's very valuable, but what's the monetary value behind it? Is it backed by something tangible? And you see this kind of questions popping up more and more from a community perspective, the Web3 community. And I believe that there is a real yearning for real yield, things that are sustainable, not extremely high, and are both specific for retail users, but also applicable for institutional. Because one way or another, institutional money is needed for sufficient liquidity in this space. But going back multiple years, if you look at what does the Web3 industry really stands for, is inclusivity, right? We make it possible in the industry for people that would normally never be able to use sophisticated financial products because they are not accredited investors. They don't have enough capital to get started. They don't have the knowledge from the network or even a bank account, right? In some countries.
Yeah.
And we give these kind of people control over their financial future, and it makes sense to make this circle back around and come back to things like real world assets, to combine financial decentralized products with real world physical goods. And I think that's why we have something really cool here, because still we cater to the inclusivity, but it's also sustainable.
Yeah, it's really, really well defined, that. It's absolutely fascinating. I think, again, it's just going to see some massive development over the years to come, particularly as more people get aware of how they can get involved, or maybe even that whole process of, I never knew I could actually, obtain these kind of assets before in my life, without going to usual like physical art galleries and things like this. It's really opened up the industry a lot more, and certainly the ability to own those kind of assets. Really interesting. So I massively appreciate both your points on that. Moving away, I guess, from the real world kind of asset conversation, I wanted to talk a bit about more so the chain choice that you have. And it kind of relates possibly in regards to the two projects combining as well, and what we've just discussed, because I know that you guys integrated with Avalanche a couple of years ago. In my mind, it seemed like yesterday, but of course, time flies. I kind of understand already probably why you chose Avalanche. I know some of the team there from recent like Digital Pound Foundation events that I've been to, etc. But could you tell the audience that perhaps don't know why you chose Avalanche as the chain of choice? And also anything perhaps that's come out into fruition in terms of developments or exciting aspects of that integration in the near future?
Absolutely, yeah. So when we started building, we started working with EVM networks, and we wanted to be as blockchain agnostic as possible, but on the EVM side of things. So we started to develop for Ethereum first. And then really quickly after, we added like Polygon, Avalanche, BNB Smart Chain, etc. And this was mainly just to have additional supported networks on our bridge and the DeFi terminal. And by building on these networks and speaking to the teams behind these networks, you get to know a little bit better what's their focus, what are their goals, how's the team working. And I have to say, besides the fact that Avalanche is a really amazing group of people, we really love working together with them. Their focus is simply also on furthering or bringing tokenization of real world assets to the next level. So this is a really clear synergy of where Avalanche sees the industry going in the next year, and what they're betting on, and the same for us and for ArkeFi, of course. So this combined with the speed of the Avalanche network, cheap transaction fees, But also what's really interesting is they have this network of subnets, of course, and everyone is able to create a subnet. And that makes things suddenly really interesting. A subnet is basically another network, another blockchain network within the Avalanche ecosystem that can be created with as the basis the Avalanche EVM. And here you can create a really interesting interoperable ecosystem between all these subnets that can be for completely different use cases. They can be hyper specific. We are working together with Avalanche on a data tunnel subnet for our data tunnel product.
Wow.
So this is really super specific, but can also be way more broad, of course, where you just have a more general idea of what you want from a blockchain network. And eventually, I see also opportunity for a dedicated subnet on Avalanche for our Nexera protocol, for example.
That's awesome. I guess, Mads, I suppose being related with AllianceBlock in this fashion, I suppose Avalanche stood out for you guys as well in that kind of aspect.
Yeah, definitely.
Yeah, it's really interesting. The other topic quickly, Matt, predominantly from your side probably is the Nexera ID. It's very interesting for me from the aspect of the developer side of things, being able to be given them tools to build the APIs, the frameworks, etc., to enhance any of their kind of like projects or solutions that they're trying to build on your network. Could you perhaps, for the benefit of the audience, explain the Nexera ID to those that don't know, or perhaps not heard too much, about that kind of aspect of what you guys are trying to achieve?
Yeah, so in a simple explanation, Nexera ID is built using the Nexera protocol, and it's smart wallet infrastructure. So it's not a wallet in itself. Mm-hmm. It's not like a MetaMask or anything like that, what you can see or touch, but it's infrastructure that is necessary in order to create a wallet. Like our partner Brilliant, also formerly known as Dua, mm-hmm. has been working on their own wallet, and they're using Nexera ID as their wallet infrastructure. And Nexera ID makes it easy to make compliant workflows in wallets possible, and make the interacting with wallets and anything on chain easier, because using account abstraction, which was made highly popular thanks to Vitalik a while ago, account abstraction, social login, asset recovery, these kind of things make it much more low barrier to enter Web3. And if we want to have the next wave of adoption, we need to have this low barrier access. It needs to be easy to use. It needs to be possible that if you lose access to this wallet, that for somehow you can still recover your assets, which is impossible right now. We've cracked this nut with Nexera ID, and through collaborations with ArkeFi, for example, we can learn a lot on how to keep on building on Nexera ID, so that also for platforms like ArkeFi, we can make it as easy and accessible as possible for people that don't necessarily are interested in participating in anything Web3, can still join and use the platform without maybe even necessarily knowing that they are doing anything on Web3. Yeah. I mean, how cool would that be? They have all the experience of a traditional Web2 platform, while everything is decentralized. They own what they're doing. They just don't realize it.
Yeah, that's a really good point, actually. One of the recent Digital Pound events that I went to, they were talking about how will we define success, not just in their spectrum of CBDCs and things and frameworks for finance, but in general, the whole use of crypto and Web3. The day it will become successful is when the day is that people don't talk about it anymore, and people just use it. And it really resonates with what you just said. And having those kind of platforms to build on, and what you guys are doing is only going to enhance that and speed that process up, I think. And it kind of nicely loops that whole entire conversation together, really, because real world assets being utilized through these kind of wallets and applications, through visibility, the ability to show the verification and the processing of everything is really important. So it's really cool what you guys are doing.
If I may add,
please.
I think Mats can agree with me here. Like, it's really easy to speak about some cool use case that is existing in Web 2 and bring it to Web 3, and we can solve it really easily technically. But it's easier said than done, right?
Yeah.
Like the people that Mats deal with don't necessarily know anything about Web3. So you want to show them all these difficult things that can be very hard to learn. We need to solve these things.
If I just can add something there,
please.
I think really coming from Web 2, so to say, the difficulty is really you are more or less left alone. When you want to start creating a wallet, you need an exchange, you need from an exchange over to whatever network, right? And it's very complicated. The first time I tried it, I lost 100 quid. It's not that much money, but still it's a learning process. And I was stubborn, right? I didn't want to read too much about it. So just tried it myself and had no clue how it worked. And it was a bit more complex than just plug and play, so to say. And I think this is also one of the cases that Nexera IDs is solving. It makes it a bit more efficient for use cases where you don't really have this let's say knowledgeable element from the Web3 community. And this is also, if you really want to make this a wider thing, and as you mentioned, Simon, that is only going to be mainstream when we don't talk about it.
That's right.
So then we need to have a case where you just can basically go in, you start it up, you click on a button more or less, and then you're ready to go. Because today there's too many different components involved in the process, and it just make it very, very difficult to navigate in as a new user to Web3.
Yeah, that's great point. I think so many people could just get put off if they knew the full intricate detail of how this kind of all these frameworks and systems work. It's not quite like how Web 2 orientates, and even that, when it first started, of course, I was probably very young when the web bubble occurred and everything, and the internet really took off. But even back then, I could imagine a lot of people were very confused and disorientated. But even with the Web3 side, is way more advanced. And yeah, it's just one of those things where you want people to come onto your platform, whatever it might be. In the instance last year when I was working in blockchain gaming, it was that exact point that you want people to come on and it just works. It's just you don't need to have instructions or anything like that. So it's an absolutely amazing point, Mads. And I want to stick with you for a second as well, and this will open up to both of you, because this has been an absolutely fascinating conversation. But I think this is a good opportunity, really, to potentially talk about some possible exciting developments within each of your projects, respectively. So yeah, if there's anything that you guys can share with us, albeit maybe not exclusive, but like that would be exciting for the audience to hear about that's up and coming. I'd love to start with you, Mads, if there's anything interesting coming from ArkeFi in the near future.
I would say there is, because we are launching here on the 1st of September. So there definitely
Awesome.
is some exciting things coming up. But there's a couple of things that we have worked on as we build up ArkeFi. And one of the things is actually to guarantee a return. And that actually sounds very, very crazy. But the thing is that since that investors are buying objects at 50% of the market value, there's a lot of other investors who are speculating in to buy it at 75% of that market value. So we will be able in the near future to basically offer different kind of investment risk opportunities on the platform, meaning that something can have a non-guarantee, something can have a guarantee. In case the client defaults, you will get a guaranteed 50% return. And I think this is very unheard of in the industry. So this is really something that I find revolutionary, and I'm looking very much forward to sharing more once we go live.
That's awesome. That's really exciting. Looking forward to seeing that. Thank you for sharing that, Mads. And Matt, over to you. Really interested to hear if there's anything of great interest to the audience relating to AllianceBlock.
I mean, yeah, for us, it's equally excited for the ArkeFi to go live, right? So this is some really huge milestone for us. I'm always have been a personal believer in this use case, and I'm just so very happy that we found an incredible partner as them to bring this to realization. Other than that, from AllianceBlock, we've also been releasing the first version of our Nexera exchange. And Nexera exchange makes it gives you actually the centralized exchange comforts in a completely decentralized way. So it's like you're trading on Binance. It's quick. It looks good with order book, good charts, but you have still the Uniswap liquidity underneath. And in the next iterations, we are releasing a decentralized limit order book that allows you to use an order book completely decentralized on top of Uniswap. And in future iterations, we'll keep adding more support for more pairs, more networks. We're now on Arbitrum. Ethereum base is coming really quickly, and other protocols, other DEXs will be supported as well. Something really cool on top of that, loop also back to ArkeFi, is the fact that the ArkeFi use case in its really shortest form, it creates a digital twin of the RPs. This is being fractionalized, and users can buy this fraction. Well, when you have this fraction, you have you don't just have an NFT. You have what is called as part of an ERC 1155, and you can make this tradable. So what we are working on is support on this Nexera exchange to have fractions of real world assets tradable like any other exchange. I think this is really exciting.
Wow. What a way to wrap up this amazing conversation with you guys. Absolutely phenomenal. There's a lot to take in. I know the audience is going to be over the moon going through this. But it's been absolutely fantastic, guys, to have you on the channel. Hopefully you guys will come back on in the near future. It's been fantastic. So absolutely huge to hear some of those updates coming up in the near future. And it was absolutely fascinating to run through certainly many areas that I'm very passionate and interested in with you guys who are, you know, very much massively experienced and knowledgeable in those areas. So I really appreciate your time. I know you're both very busy. Of course, I'll leave all the links in the description below for both of the projects and anything else that's coming up in the near future. But guys, thank you so much for joining us on the channel. And I really appreciate it. And I really do hope that you come back on very soon.
Thank you so much, Simon. It was really amazing to be here.
Appreciate it. Thank you so much, guys.
Cheers.
Well, guys, hopefully you found that interesting. I certainly did. It was fantastic to speak to Matt and Mads, respectively, for each of their projects. And hopefully, more of this topic will come into fruition around real-world assets being utilized and the frameworks behind them coming into fruition as well. And I think it's really cool to talk about the opportunity for accessibility, more and more people being able to get involved in investing, and certainly within assets they never thought they perhaps could have done in the past or even knew how to. So it's great to see projects like this coming together and really working on that aspect of things as well. And I think what I really resonated was that topic around Web 2 to Web 3. Of course, mass adoption is needed for all of this to work and for our investments to grow, of course. But I think the predominant factor there is that education is key. And I think more and more people, hopefully, as I said, you guys learned something or a lot from this this video at least. But I think that orientation in the market in general and the industry just really needs to kick it up a gear, I think, with the educational piece. And that's not just in these areas of fractionalization and real world assets. I think it's across the board, whether it be finance, supply chain, energy sector. That's what we're trying to do on the channel, of course, have like-minded people on here and great professionals with fantastic background and expertise like Matt and Mads have. And it really puts things into perspective for sure. So again, thank you to those guys. Hopefully we'll see them on here soon. But that wraps this video up, guys. Really enjoyed that one. Hopefully you did. We'll see you in the next interview video. Take care and bye-bye.